Hey, what's up, you guys? I was just going for a little hike and I thought I would sit down for a second, catch my breath. And then I was just thinking about how it's almost New Year's, and it reminds me of when I started trading. Because for me, and many of you guys know this, but I dabbled a little bit in trading, and I was interested in the markets when I was pretty young, like in middle school and even in high school. That's when I had my first trading account. But then I took a break and, was working like regular jobs and stuff. And I got to a point where I was in my 20s, and, this was like right after the Great Recession, whatever. And there weren't a lot of good jobs, and I was in a funk. I was kind of depressed. I wasn't really happy with what I was doing. And, in Vermont, the days can be very short in the winter. It's just, I was feeling like I needed to do something different. And I had been thinking for some time about wanting to kind of get back in the market, but it was one of those things that, like, I would think about it and then I would just get overwhelmed, and I was like, I don't know. And then I would just do nothing, and then another 6 months would go by, and then I would hear something about the market, or I would think, man, if I had just started 6 months ago, think of where I'd be today. And then I again would just kind of like, I didn't have the motivation. And so I ended up doing it as a New Year's resolution. And for me at the time, so I had a lot of friends that were working in restaurants. And so I was when I'd hang out with them and we would have, house parties and things like that, I was always up really late, and I wasn't getting up even early enough to be trading at the open. So for me, part of the New Year's resolution was saying, you know what? I'm actually going to get up. I'm going to set my alarm, and I'm going to start getting up early enough so I can sit down and start to watch what's happening at the open. And just that one step of making a New Year's resolution that I was going to set my alarm and get up early, that for me was, I guess that was kind of the start. And then, of course, I had to figure out, how I was going to trade and things like that. And I was just mentioning this in a recap the other day, but, and many of you already know this, but so not to be repetitive, but when I got started, I had some money. I was fortunate in the sense that I had $100,000. Now, I had gotten that because my father had passed away, which was, still the worst thing that had happened to me. I mean, it's just, losing a parent is terrible, and losing a parent when you're young is even worse. But when my younger sister turned 21, she got $100,000 and I got $100,000. That was the money that they had gotten from when they sold my grandmother's house, and they had saved about $200,000 for his retirement, whatever. And anyways, so he didn't get to live that, and so that went to me and my sister. And so I thought, okay, I've got $100,000, and at that time, it had been invested with one of these, kind of like just run-of-the-mill investment advisors. And despite the fact that the market was actually rallying off the low of 2008 or 2009, the account wasn't really doing that well. And so I kind of thought to myself, I was like, okay, this is money that I have. When I was in middle school, and we had that semester on the stock market. That was in 1997 or 98. And, at that time we were all paper trading, like .com type of stocks, like Yahoo and, I don't know, whatever, different stocks like that. And then when I had tried trading again in high school, I was trading these, large cap companies like ExxonMobil and US Steel and Caterpillar. And the problem with that, so now I'm coming back and I'm in my 20s, and I'm like, okay, I've got $100,000 to work with. And I thought, all right, well, if I were kind of a regular job in Vermont right now, when I was working in New York City, for instance, I was making $45,000 a year in New York City. And like a third of that was going to rent. So in Vermont, the same job that I had, gosh, I'm trying to remember now. I can't remember off the top of my head what the hourly wage was, but I had applied for the same job in Vermont, basically, and it was, I want to say it was it was like 70% of what I would have made in New York. So I guess instead of 45,000, I probably would have only been making like 30,000 or maybe 35,000 a year. And so I was like, okay, well, if I can make, 25,000 to 35 or $40,000 from my investment account, then if I could treat it like a full-time job, then that would be, I'd be making more than working a regular job. So then I kind of had to back into the number of, okay, well, if I need to make, let's just say 25,000 a year, that's 500 a week, right? So 1,000 a week would be 52,000 a year. So I was like, okay, well then, 25,000 to 50,000, that would be growing a $100,000 account by 25 to 50% per year. So now what ended up, quickly I realized I'm not going to be able to buy Caterpillar, which pays probably like a 2.5% dividend. 2.5% on 100 grand is $2,500. I'm not going to make enough on that. Now, not that that wouldn't have been fine if I was still working a regular job, dividend, and then the growth of the stock, it would have been fine. But in my case, that wasn't going to work. And then, some of these high interest corporate bonds and stuff like that, even those ones at like 10%, 12%, 15%, that's still not quite there. So then essentially what I ended up having to do was go further and further up on how much I was willing to risk for the return. And so I've talked about this a million times. Also, I had a friend in high school who made like $16,000 trading penny stocks. And I thought, man, okay, I don't know how much money he put into it, but that was obviously one really great trade. And so I thought, if I was able to do something like that, even just like twice a year or 3 times a year, that right there would get me the goal that I had of, making enough to not have to have a regular job. And, part of the reason for me that I didn't want a regular job was I didn't feel that I was actually able to keep up with the stress and the responsibility of a regular job, because I had been suffering from panic attacks, and it was really, really hard for me to imagine being able to really... I felt that I could do a job that had less responsibility and had less pressure, but then I'm back to like minimum wage. And I had a college degree and I had a good job in New York, but I left that in a large part because I didn't feel that I could keep doing it because I kept having these panic attacks at work. So anyways, I kind of designed my life a little bit around what I could do given these sort of constraints that I had. And so with trading, I kind of was looking more and more higher on the risk profile, and I started looking at penny stocks and things like that. And I, unfortunately, I realized pretty quickly that was not going to be a consistent way for me to make any money. And I didn't even know if I'd be able to make it, period, with penny stocks, because I just couldn't figure out sort of the rhyme or reason of why some would go up and others wouldn't, and et cetera, et cetera. So, I ended up over the course of a couple of years getting kind of more and more honed in on, really over the course of a couple of years, just trading a lot of different things: mid caps, large caps, options, penny stocks, swing trading, day trading. And, as I got all of that data, I was just able to kind of look at what I was making the most on. And then I cut out the other stuff and focused just on what I was doing well. And, that I stuck with that and I turned the corner. My results, of course, aren't typical. So I say that as always, as my disclaimer, that there's no guarantee you'll find success. The strategy that I trade works for me. And of course, I'm happy to share it with anyone who wants to learn it, but there's no guarantee it'll work for you. I think the strategy works for me because it's a good reflection of my personality and my risk tolerance. I'm willing to take some risk, but I'm also sort of risk averse in other ways. And the strategy just sort of fits that. Like, one of the things with my trades being really short is because I always feel anxious when I'm in a trade that something's going to happen, like the stock's going to get halted pending news, or, all of a sudden news is going to come out, it's going to tank. So I have shorter trade times to accommodate, in a way, my own risk, my own anxiety about, getting stuck in something like that. but it all kind of goes back to this idea that I had of like, okay, I'm going to set my intention, New Year's resolution, and I'm actually going to commit to following through with it. And you don't have to do that as part of a New Year's resolution. You could just say like, okay, starting today, I am going to do this, and then have the discipline to do it. So, we're here at the new year, and I encourage you guys to think about what your goals are for the year ahead. And if you start learning something today, where you'll be in 6 months or a year. So the best time to start is now, because the sooner you get started, the sooner you start learning. And not necessarily just with day trading, but just with anything in general that you want to do. So I hope this is sort of interesting. I just was taking a little break and kind of thinking about it as we're coming to the end of this year and a new year around the corner. So here's to an awesome new year. I hope we have a ton of great opportunities. I'll be trading as always, and hope to see you guys in the community and see you soon. So, all right, that's it for me. I just want to come on and say that. All right, talk to you soon. Bye.